Hi everyone, welcome back to Corporate Decoder. Today we are diving into Radian Group's latest 10Q filing. Think of it like your credit score after a wild spending spree. Are things looking good or is there some damage control needed? We will find out. We're talking about Radian Group's performance in the first 3 months of 2025. This report card gives us a glimpse into their financial health, how their mortgage insurance business is doing, and if they're ready for whatever the market throws their way. So buckle up because we're about to decode this corporate document. If you enjoy getting financial report insights explained in simple English, hit subscribe. Also, come join our Discord. It is linked in the description below and let us know what you think. Let's start with the most important figure. Radian guarantees risk to capital. Think of it as how much risk they are taking for each dollar they have, was 10-to-1. The important part is, under state regulations, it needs to be less than 25-to-1, so they are doing pretty well. This means Radian Guarantee is in good shape, managing its risks responsibly, and ready to cover potential losses. Next, we find they have over $5 billion in fixed maturities available for sale. Available for sale securities give Radian flexibility to adjust their investment strategy as needed. Let's also quickly scroll to the front and see what is happening with their common stock. They have 134,234 shares outstanding as of April 30, 2025. Now, let's go to the income statement. Here, net premiums earned, which is basically the money they made from their insurance business, is up a tiny bit, but is effectively flat. Net income is about $144 million. While still a very solid number, it's a slight decrease compared to last year's first quarter. This is a crucial number to watch as it shows overall profitability, even though it is down 5% year over year. For the income on a per share basis, basic income per share is almost $1,000 and same as last year. But to be exact, the weighted average number of diluted shares outstanding decreased because there were less diluted shares. The difference between basic and diluted net income per share is higher, which means less outstanding shares on the market. Now let's scroll to the balance sheet, liabilities and equity section. Tagged here, the most important numbers are the ones that give us a sense of their debts and obligations. For the reserve for losses and LAE, loss adjustment expense, we see they have about $374 million. That's money set aside to cover potential insurance claims. They also have senior notes worth just over $1 billion, which represents the money they borrowed. And even though Radian Mortgage Capital is doing well from what we saw earlier, they still have to honor their senior notes, which can impact liquidity because the funds may not be available if a large-scale event were to happen. Net deferred tax liability increased from $746 million to $804 million, which means the difference between what they owe in taxes now versus later increased. Finally, let's talk about taxes. Although the pre-tax income was around $188 million, the company's income tax revision decreased the total profit, coming out to about $144 million. Let's also scroll back to assets really quick. Accrued investment income decreased to $44 million. Although seemingly minor, this means they earned less money on their investments. The report also outlined important risks that could impact the business. Even though there have been no material changes, they cite key political risks in the US, where executive orders could create uncertainty and volatility in financial markets. Just as a reminder, the company isn't a shell company. For a brief summary, the expenses of note includes the provision for losses. If we look at the provision for losses, it went from negative $7 million to positive $15 million. That's quite a swing that negatively impacted revenues for the 3 months. The net gains and losses on investments and other financial instruments swung from positive to negative, indicating an unfavorable outcome. Net investment income, which decreased, means they earned less money on their investments. On the other hand, there was good news as the weighted average number of shares went down, meaning the company bought its own shares back, decreasing supply and increasing value. Also to note, the SEC filing status shows that the company is a large accelerated filer. As of January 1, 2022, Radian Guarantee is no longer writing new insurance for their single premium QSR program. It will be important to watch if the discontinuation of NIW will affect net income long term. Now let's try to understand what this all means. After reviewing the numbers, Radian appears to be in a solid position. The main drag from last period was the swing in investment returns and expenses due to losses. There are some risks because their profits depend so heavily on the housing market and interest rate fluctuations, and the overall economic environment can strongly influence its profitability. While there is positive risk to capital ratio and good liquidity, the big unknown of the long-term effects of high interest rates, home sales, and the end of specific insurance programs may affect future reporting periods. There is also nothing concrete with the strategy going forward, so it is unclear if Radian has a plan to capitalize on the strengths of its other services. It may be too early to tell. Alright, that's our breakdown of Radian Group's latest 10Q. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.